All right. Hi, Warren. Hi, Norman. Thank you so much for joining me here today on Vonvo.com. The date is March 2nd, 2013, and we're here to discuss the recent U.S. budget cuts and sequestration. I just wanted to go over two things before we got started. The first is that right now this conversation is being recorded, and after the conversation is complete, I'll be uploading our discussion to YouTube. Is that okay with both of you?
Yes.
Norman, that's okay with you?
Yeah, I can't hear Norman again.
Yeah, I can't. Now he's
yeah, that's fine with me. Can you hear me?
Yeah.
Okay.
Now I hear you.
Okay.
Make sure you're speaking into your microphone, Norman. And next thing I was just going to say
I
is...
got the microphone in my mouth.
Perfect. That's much better. And now just the last thing I wanted to bring up is here at Vonvo, we are all about our conversations staying both civil and valuable. We don't want there to be any personal attacks against anyone, and everyone needs to stay respectful to one another. Are we okay with those ground rules?
Yes.
I am.
All right, great. So let's get started with our conversation. Can we start just for all of our viewers who are inside the chat room watching and listening in? Warren, would you mind giving a quick background of yourself and why you're so passionate about this issue? And then Norman, you could go ahead right after.
Let's see. I was 63 years old, born in 1949, Manchester, Connecticut. Manchester High School, University of Connecticut, BA in Economics, 71. That was 1971. First job in banking, 1973. It took me 2 years to find a job. We were in a recession back then, bad one. And collecting gap loans. It was a very small bank. One of the officers got promoted, and they put me in charge of investments. Very small portfolio, but I made contacts on Wall Street. And first went to Hartford, worked at Bache and Company. One of my contacts then went to Bankers Trust in 1976. I had traded 3 Ginnie Mae securities in my life. They made me vice president of sales and trading mortgage-backed securities. That was 1976 to 1978. I've got an echo on this line.
What's going on?
Try it now.
Yeah, I hear you fine.
There's like an echo. Yeah, I hear myself talking back with an echo.
Okay, it might be on my camera because I don't have headphones plugged in. Tell me if you hear it now. Continue speaking.
Yes, testing 1, 2, 3. Yeah, better.
Okay.
Okay, so from Bankers Trust, I say I grew up at Bankers Trust. That was my first Wall Street job. It was a top international trading firm. From there, one of my clients hired me, William Blair and Company, in 1978. I went to Chicago, started the fixed income charge department there. In 1982, with William Blair, I started my own firm, Triple I, and brought my partners along. We moved the company to Florida in 1984, and it's still there. And,
Okay.
It's parts, a broker-dealer, and investment management company. And back in 1993 is when I first wrote Soft Currency Economics, which got me started on this mission, you might say, where being an insider in monetary operations and financial markets, I came to understand how the checks cleared, how the Fed works. I was on the money desk at Bankers Trust. I visit the Fed regularly. And so I like to think of myself as a 40-year insider in monetary operations, where I know what all the staffers know at the Fed and at the Treasury, but seems to be completely known at any levels above that, the Federal Open Market Committee, the chairman, and all the other political appointees.
Right.
And that's where it used to be Mosler Economics. A couple of years ago, somebody on Bill Mitchell's blog started using the term MMT, which stuck, so now it's modern monetary theory.
Right. Great. Thank you so much for that. Norman, could you give a quick background of yourself now to any of our viewers?
Sure. Can you hear me okay?
Yeah, I hear you great.
Okay. Warren came through a little faint, but that was pretty impressive. I'm a graduate of the University of Cape Town, a CPA, undergraduate degree in maths, stats, and economics, and involved in a manufacturing company down there for 15 years or so, and then moved to the United States, where I was involved in a Goodyear dealership for a number of years, and subsequently retired. So basically been involved in two major companies, and then got involved in some additional stuff that was just interesting to me, namely foster care work, but that's another story entirely. So why am I passionate about this? I don't think I am passionate about it really, but I find it very interesting, and I think there are a number of ways to approach it, and I've got a feeling that Warren and I probably agree on most things. That's it.
Great. That's awesome. So, you guys both hear me okay, right?
Yes, you've got a little faint.
Yeah, I lowered my volume. I'll raise it while I'm speaking. And, so overall, Warren, what I was going to ask you is, could you give our viewers now just like a background of what this whole U.S. budget cuts and sequestration conflict or, issue is all about? Where did it originate from? What has resulted as of March 1st? And we'll dig a little bit deeper, but maybe just get a bit of a scope behind what this topic is kind of all about. Would you mind informing us?
Yeah, it all comes down to this myth that the U.S. has a long-term deficit problem, when in fact not only is there no such thing, but it doesn't have one right now. And that was, I guess, the summer of 2011 came to a head on the I forget what they called it back then, the debt ceiling debacle, I guess, where right after the State of the Union, Ryan had said the U.S. could be the next Greece, and we've got to do something immediately, or else we're going to be on our knees. The world's going to cave in. Nobody will have our debt. We'll be on our knees to the IMF. Interest rates will skyrocket. And every bad thing will happen to us, just like Greece. And President Obama pretty much agreed, as did all the Democrats. And so they got on their, they started moving towards some kind of a deficit reduction package before the debt ceiling, before anyone passed the debt ceiling in August. And they nearly brought the world down with what they were doing. And they, to get through that ideological impasse they had, not that there was a deficit problem, but on how to bring it down. They're both wrong on the premise, but they also both had different means of how to take 5, 6, 7, 8 trillion out of the deficit. When in fact the right move would have been to add that much to the deficit. But anyway, and so they couldn't agree. But to pass the debt ceiling, one of the things that did agree on is, I believe, the Democrats authored this sequester thing, where at year end, if they did come to an agreement, these automatic cuts would go into effect to, in fact, reduce the deficit, as they all agreed that needed to be done. And that got delayed a little bit. I'd say, I don't know, just under the radar screen, allowed the FICA tax, the payroll tax holiday, to go back up. And that was the one I pioneered for in 2010. And it was the only bipartisan thing that the Obama administration has passed, and that was to take 2 of the 15.6, I think, percent of the FICA tax to lower it by 2%. So they called that the payroll tax holiday. And they just, both sides just conveniently just ignored the fact that it was expiring. I think back in November they agreed to just let it expire without a fight. It's a $170 billion regressive tax on high multiple people who can afford it the least. And Republicans have sworn against tax increases, and the Democrats are protecting their constituency. Both sides just let the largest tax increase in history, I think, go through. And now they're adding another $85 billion in cuts on top of it. And you've got all professional economists who are paid to be right completely agreeing that if you raise spending, the economy gets better. Like, so what's so hard, right? Okay, I'll pass the mic on.
Yeah, Norman. Norman, do you have any? Yeah, Norman, do you have anything to add on top of that?
Well, that's pretty much the history of it. One of the things that I find interesting is when you consider into the future, if we deficit reduction, what would actually happen? That is one of the more interesting aspects of the thing. Would anything actually happen? Would China get upset with us? Could there be a typical thing happening down the road where we can't pay for some reason, or we can't print money? If we did print money, would it be devalued because of inflation, and then the Chinese would get even more upset? Maybe there'd be a war. I'm not sure if all that would ever happen, but be that as it may, everybody's decided that it's a good thing to put your house in order, and on the face of things, it does seem reasonable to assume that. So how does one do that? I've been involved in reducing an overbloated corporation that wasn't making profits, and I did a similar thing to that corporation. Without really knowing what I was doing, I suppose I was pretty young at the time, and I reduced the 900 members of the staff by a third. I didn't know exactly what part of it would do better. I knew there was one particular manufacturing line that wasn't making profits, and I suggested to the operating manager to get rid of that particular line. He did that, and then we reduced the corporation by a third. The interesting thing was when we did that, just like the budget cut, the sequestration here, it's across the board. So every facet of the government, or at least discretionary spending in the military, is being cut across the lines, not directed cuts, but just across the board. So everybody has to reduce by, let's say, 10% or 7% in the case of the defense military. And when I did that, when we did that at that corporation, lo and behold, we started making profits because everybody who was left behind started working a lot more efficiently. Unfortunately, 300 people had to leave, but it started making profits. And the sequestration to me seems something like that. As far as the military is concerned, and I live in an area which is heavily military, and we're going to particularly get hurt, I would imagine, but we know that the military is way too big for our needs. So I don't see that as a particular problem. So generally, I think there are a lot of positives to look at when you look at the sequestration. And I sometimes have been wondering whether the House, the Congress, the President may be making noises when in fact maybe it won't be a bad thing. It won't be as bad as we think it will be. Now, on the other hand, of course, Reagan, 20, 30 years ago, they did the same sort of thing, and they didn't go through with it. So this time it's a little different.
Right. Go ahead, Warren.
Okay, well, look, if the premise was correct that there is some kind of long-term deficit problem, then I would agree. But there is not. So let's go back and talk about the premise.
Can you, Warren? Would you mind just explaining, that your interpretation of that? Because there are thousands out there that would disagree with you on that point. No.
Disagree with me?
In regards to a long-term deficit problem, there are many, many, many people out there that would probably, disagree with you by making that claim. So would you mind just, stating why that's not the case?
So let's go specifically with what Norman said is the problem. So, for example, he said that it could lead to the current path of fiscal expansion, even before the first round of deficit reduction. The idea is it could lead to a debasement of the currency and inflation down the road. Is that correct?
Yeah.
Yeah.
Okay, well, it seems to me anybody making that statement, I'm not trying to be personal to you, but because everybody's making that statement, that is the statement. The burden of proof that there's an inflation problem down the road is on someone making that statement. Now, if you look at the Fed's 30-year inflation outlook, it's 2%. And if you look at the market's inflation outlook through the Treasury index securities, and Treasury index securities around the world, actually, it's also very low. And if you talk to any professional forecaster, even without any form of deficit reduction, nobody has there are no credible long-term inflation forecasts that show any kind of a inflation issue, short-term or long-term. And if you and so it would have to show up in some inflation forecast somewhere for it to be something that you would need to take action about.
Right. Norman,
I guess I should respond to that. It sounds like I should. Anyway, I don't disagree with you there, Warren. As I said, it's interesting to me what would happen if we just ignored our deficits, let it accumulate. I'm not sure what the end result would be, considering the demographics of the country. We're getting older, we're graying, all that sort of thing. Do we need as much as we used to when we were younger, and looking for homes and that sort of thing?
And I agree. So let's just stop here for a second. So let's look at Japan. Aging faster, same kind of population problem, deficit 3 times ours, and the strongest currency in the world, the lowest inflation, and the lowest interest rates, 0.65% on their 10-year notes. Of course, everybody says Japan's an exception and every place else is an exception, but they're not all exceptions, right?
Right.
So clearly there's something else going on, and that's what I'm all about. There is something else underlying all this, But so first, I want to just point to all the evidence. The evidence is Japan with 3 times the debt, and other countries. The UK is in worse shape with no long-term inflation, and no long-term inflation forecast by any professionals. Okay, so those fears of deficit just can't be supported. Okay, and I don't think are there any other reasons that anybody thinks we have a long-term deficit problem, other than, let's say, interest rates, and inflation.
Sorry, I didn't catch it. What?
We can be the next person, silly thing like that. There is nothing. Look, and the difference is, of course, the United States government is the issuer of the dollar, the same way Japan is the issuer of the yen, and the same way Greece is not the issuer of the euro. The Europeans turn themselves into what are like U.S. states. And yes, California can be the next Greece, and interest rates can skyrocket, and they can be forced to go to the IMF for money. I would completely agree. But even look at the European Central Bank, which is the equivalent of the Federal Reserve. They just spent, €1 trillion a month or so ago, and nobody asked if it came from China or they taxed it or whatever. They spend it the same way the U.S. government spends. They just credit an account on their own books. And so, A, there's no solvency problem, and B, if overspending was going to cause inflation, you think some economic forecaster, would pick it up somewhere. Or at least the burden of proof on somebody saying there's an inflation problem would be to pick it up and start forecasting 30 or 40% inflation or whatever you think is going to happen. And I can tell you why there's no inflation in the forecast if we're ready for that.
Go ahead, Norman.
I'm ready. Okay.
Okay, so
I thought Warren was going to say.
So look, if you think about it, who talks now? I'm sorry.
Finish your point, Warren, and then Norman can chime in.
Okay, so look, anybody who's the issuer of the currency, of their own currency, if you think about it, from inception, they can't collect taxes or borrow until after they've spent the money. Okay, the issuer of anything can't collect his thing until after he's issued it. The bus company issues bus tokens, they can't collect them until after they issue them. The football stadium can't collect tickets until after they get them out there somehow. Okay, if you've got a U.S. dollar in your pocket, it came from the U.S. government. For one thing, the Treasury Secretary signed it. It isn't counterfeit, right? And that's a dollar that they've spent and they haven't taxed yet. Because if they taxed it, you wouldn't have it anymore. And so the issuer of anything, but I'm talking about the currency now, and I'll speak about U.S. dollars. If you think about it this way, the dollars to pay taxes come from spending. And the dollars the U.S. borrows comes from government spending. They can't come from anywhere else. And so if the U.S. doesn't for any given amount of tax, if the U.S. doesn't spend enough to cover the tax bill and the desire to save, to put money in pension funds, for China to hold $2 trillion in reserves, for Japan to hold trillions in reserves, for Apple to hold 140 billion in reserves, for Google to hold 50 billion in reserves. If they don't spend enough to cover the tax bill and to cover the net savings desires of the global economy, the evidence is unemployment. They've created a shortage. And what this all comes down to is the currency itself is a very simple public monopoly. The only source of the money to pay taxes is the government itself. Okay, and so it's a simple monopoly. And once you recognize the monopoly, you see the need to spend more than you tax. Just like any monopolist, any issuer has to issue enough to cover the bills, the tax bill plus the savings. And if you don't, you create a serious problem. And you're never going to and let me just add one last thing, and then I'll turn the mic over. The government deficit equals the economy's savings of dollars, net savings to the penny. Okay, it's a matter of accounting. It's the first national income equation. That means if the government spends $1 and doesn't tax it, somebody's got it. If the government spends $1 trillion and doesn't tax it, somebody's got it in some bank account, some account somewhere. Because that's how they spend. They credit an account. It goes from account to account. It doesn't disappear unless it's used to pay taxes. So if you were to draw a graph of the net global dollar savings, it's the exact same line as the deficit. So the deficit is $16 trillion. There's $16 trillion of savings, and it all happens to be at the Federal Reserve in Treasury securities or cash in circulation. Okay, and so or what they call reserve balances of banks. But the most of it's just sitting there in Treasury securities at the Fed, which are nothing more than savings accounts at the Fed. So the government deficit equals, let's call it non-government or private savings to the penny. That includes residents and non-residents. And if you notice, everybody says, "Oh, Americans are saving too much. That's why." Blah blah blah. And if you notice, the savings, they say, "Oh, it's the highest since 1994, 1995." That's the last time the deficit was this high. When the deficit goes up, savings go up. When the deficit goes down, savings go down. It's the same line to the penny.
Right.
Okay, I'll stop here.
Go ahead, Norman.
Yeah, you were going in and out a little bit there. I'm not sure I'm following you exactly, but I would imagine that if the government is spending money, some of that money is perhaps overseas in terms of interest to China, for example. Some of that money goes via intermediaries to imports from overseas, which means that the money is overseas, and we owe whatever we owe to those people who exported to us. But,
can I explain that? Let me explain exactly how that works operationally. When the government spends money, it credits somebody's account at the Federal Reserve Bank. So let's say it pays General Dynamics for a contract, and General Dynamics uses J.P. Morgan. The Treasury will credit J.P. Morgan's account at the Federal Reserve Bank. If J.P. Morgan then pays China, the Federal Reserve debits J.P. Morgan's account and credits China's account, also at the Fed. Okay, and then if China spends the money and buys Treasury securities, they debit China's reserve account and credit their securities account, also at the Fed. So the point is, once the U.S. government spends the money, it's just a credit balance at the Fed in somebody's account. And all that happens to that credit balance after that is it gets moved from one account to another. It doesn't fly away overseas or anything like that.
Right. So, Norman, did you have a follow-up question that you wanted to ask, or did you want to continue your point?
Okay. I see where you're going with it. I'm not sure it's germane to the topic necessarily, but if China decides instead of keeping it at the Fed, they want to spend it in Europe, or they want to buy South Africa, a gold mine or something, it's going to move around the world.
Let me explain that transaction. So if China decides to gold mine, so let's say China decides to buy a gold mine and pay for it with dollars, and they're buying it from who's the gold mining down there? De Beers, I don't know. Let's say they want to buy diamonds. So the Fed will debit China's account, and they will credit De Beers' member account at the Fed. Now, the dollars that they get will be in some member bank account at the Fed. If it's a South African bank, that bank will then have an account at a U.S. bank like J.P. Morgan, which will have an account at the Fed. So those dollars to the diamond mine from De Beers would go from China's account to Bank of America's account or J.P. Morgan's account, also at the Fed. The dollars can't go anymore. If China wants to sell the dollars and buy rand, then it would have to find somebody to sell the rand. They would engage in it. They would agree on the transaction, sell the dollars and buy the rand. The Fed would shift the dollars. Let's say they buy the rand from J.P. Morgan. The dollars would go from China's account at the Fed to J.P. Morgan's account at the Fed. The rand would go from J.P. Morgan's account and at the Bank of South Africa to would go from De Beers' account at the Bank of South Africa to J.P. Morgan's account at the Bank of South Africa. So the rand change accounts in South Africa. The dollars change accounts at the New York Fed. Neither currency moves outside of its own central bank. It's just the currencies don't move. The owners change. The name on the account changes. But the rand stay in South Africa and the dollars stay at the Fed in New York.
Right. So just quickly, Michael, do you hear us? Okay.
No, I don't hear him.
I can't hear you though.
Yes, I'm on.
Oh, there you are. There you are.
Here I am.
Yeah.
555.
Yeah. Did you have a question that you wanted to ask Norman or Warren?
No, this is about the sequester, right?
Yeah. So did you have a comment or a question that you wanted to bring up?
Yeah, I think the sequester debate's way, way, way too early. We don't know what's going to happen to Obamacare. It could just, collapse on the insurance industry. If people with pre-existing conditions like me don't have an adequate subsidy, we're not going to join. And unless we're in the hospital, then we sign up. Enough people do that, rates will go sky high, and the whole point of reform will be gone. And I think the folks in Wall Street will see that happening before it actually happens, and that will just collapse the entire health insurance system and require a bailout. So until we deal with that, dealing with little health care reform or health reform to Medicaid and Medicare is just a small issue. This is going to be a major collapse. So they should kick this down the road as fast as possible and, minimize it as much as possible. They've got bigger fish to fry. The question is whether it's going to hit in 2014, 2013, or after the election in 2015.
I agree. It's all an optical illusion that doesn't have any operational reality, and so I don't know how they're going to sort it out.
So
we're just going to have to react to whatever they do.
I do remember the sequesters of the 80s. I lost 2 federal internships, 2 paid co-op positions at the Department of Labor because of it, because of Graham Rudman. I had the pleasure of graduating in the class of '86 with my MPA. So both a summer internship and a spring internship were canceled, even though everything was ready, but the budget wouldn't clear it because there was a hiring freeze.
Right.
Yeah.
So yeah.
I finally got a PMI though.
Right.
Well, Reagan said if the deficit ever got to 90 billion, we were doomed.
Right. So what I was going to ask, I'm obviously not an expert economist, but part of what you were talking about before, Warren, in terms of how, different borrowings kind of appear on different, countrywide like financial statements and it all kind of going through the Federal Reserve and whatnot. What I wanted to ask, and I don't know if this has a direct correlation with things, but part of me thinks that it does from what I know about, economics, is what does the United States and the American dollar acting as the world's reserve currency, how does that factor into all of, into this situation as a whole and to what you were describing, a few minutes ago?
Okay, so it's rhetorical, but what does being a reserve currency mean? It means that other countries hold your dollars in reserve.
Right.
So China has $1 trillion in reserve. They have sitting at the Fed, and Japan's got $1 trillion. You just clicked off, Max.
No, I'm right here.
Okay. And so Europe wants. I got my echo. Let me turn this down. So Europe came on, and they wanted the reserve currency, and it hasn't happened. And the yen's not a reserve currency, second largest. So what's going on here? Okay, so what are the conditions to be a reserve currency? For one thing, everybody else has to have your currency. So why does everybody else in the world have dollars? That's because we have a trade deficit. We spend $500 billion net on imports. Okay, we spend $500 billion more than we whatever it is. We import them. Somebody gets those dollars overseas. We just spend them, and of course they sit in their accounts at the Fed. But the owners of the accounts are non-resident, or the Bank of China or the Bank of Japan, and that's because we're running a trade deficit of $500 billion. So we're adding $500 billion to global savings of people, entities outside the United States. And so when you run a trade deficit, exactly that many dollars are accumulating in the accounts of people who don't live inside your borders, of non-residents. And so over the years, that accumulates. What's that?
American citizens that have parked the money in an overseas account and don't pay taxes.
Yeah, right. Whatever. Anyway, but by importing, we're those dollars when we buy the imports, those dollars are sitting with non-residents, and they're not spending them; they're just accumulating them. And so that's called a reserve currency because everybody's holding them in reserves. Now, Japan runs a trade surplus, so they're not buying from anybody. So he has in a yen, so the yen's not a reserve currency. In fact, it's quite the opposite. Everybody's short yen. Everybody's net borrowed yen to be able to buy the Japanese products. So the yen is not held in reserve anywhere. I don't mean anywhere, but on a net basis, it's not a reserve currency. There are some people holding yen, some people holding the currencies. But now, if you look at the euro, it's the same thing. You don't see widespread holdings of euro because Europe's not a net importer. So here, the interesting thing is the EU started with the new euro, and they want it to be a net exporter. They want to be like Germany and be an export powerhouse, and they want to be the reserve currency. Well, they're talking out of both sides of their mouth. How is anybody supposed to have your currency if you're exporting to them? They're going to be short your currency. People have your currency if you buy things from them, not if you sell things to them. Okay, so the idea of reserve currency is just another way of saying the U.S. is running a trade deficit. It's nothing more than that. It doesn't affect anything else. It doesn't affect pricing. It doesn't affect inflation. It doesn't affect any of that.
Go ahead, Michael.
On the long term, I would disagree. This is what I put in my comments for the record to two hearings this week, which are available on my notes page on Facebook. And that's that eventually Europe and China are going to want to be reserve currencies to the extent that we are, or in which case they'll just sell their dollars, meaning somebody's going to have to buy them domestically, which involves taxation on those people who will be able to afford them, which is the children of the rich. Nobody else will be able to afford that amount of currency dumping, or we'll have high inflation.
Hey, Michael, can you stop there and just go back and repeat those like one thing at a time so we can address them?
Okay.
So what's going to happen now? China's going to want to be a reserve.
Eventually, there's two options. The one option is either China or Europe is going to want to really be a reserve currency. For China,
what does that mean? So what does that mean? What does that mean? What does be a reserve currency mean?
Well, not even be a reserve currency. Just have their own quit buying our stuff. So, they'll want to sell off their debt for whatever reason. They'll sell off which debt? Their debt. They'll sell off the U.S. They'll sell off the U.S. Their U.S. bonds and consume more. Let's say there's a consumer revolution in China, which is almost inevitable.
Let me just state, isn't that exactly what our trade representatives are trying to get them to do? To buy more things here? So that would hardly be considered I would recommend that policy, but it would be hardly be considered a failure.
Well, let's look at the GAO report that came out that said our biggest budget buster is not entitlements, it's not discretionary spending, it's net interest. And it's just going to keep growing.
Well, wait a minute. Let's cut on that. What does budget buster mean?
The thing that makes the budget bigger than rising as a share of GDP.
Well, why is that a problem? Well, wait, first of all, number one, why is that a problem? Number two, it is not rising in GDP. Only the unemployment company has been doing that.
All right, guys, can we get Norman? Norman, are you here?
It looks like he's here.
Yeah, I can see him.
What's that, Max?
Yeah, I just wanted to get you in here if you wanted to chime in, because I know you had got kicked out, and I'm sure you've been listening in. Did you have any remarks that you wanted to...
Okay. I don't know if we're getting off the topic a little bit. I think Warren and I have pretty much agreed that at the worst, we're not sure if they didn't do anything about cutting the expenditure so the budget would balance. Would anything happen in the long run? Maybe nothing would happen because we're a reserve currency. We can print as much as we like, and we don't have an inflation problem on the horizon. And we may not have it for a long time to come, and we'll certainly know something about it before it ever happens. The question is, now that we've got the sequester and we've got the budget cuts, is that a good or a bad thing? Is it going to reduce the number of jobs out there, number of people employed? Apparently it will. People will have less to spend because they'll be on furlough. So it is going to shave off some growth in our GDP.
Yeah, and the answer is yes.
Or not.
Yeah, and the answer is yes. Every forecaster agrees that that's going to happen.
Go ahead, Warren.
It's just like the austerity in Europe. Everybody agrees it makes the economy worse.
Right.
Right, so I have a question here from one of our audience members, and I guess I'll ask it to each one of you. You guys all there? You guys hear me?
Yeah.
Okay, great. So the question is, to sell the dollars, doesn't that mean they have to buy our stuff? If it's accounting, then the Fed transfers the money from one account savings to the other, and then they buy from the checking account, ? What, do you understand what Bruce is referring to?
They're not
yes.
selling our dollars, they're buying them. That's the thing. They're not. Nobody's selling our dollars now. Eventually, they will, and eventually that might be good for American workers or American trade. But there's two political issues, though. One is the fact that those bonds will be out there, and they'll be lowering bond prices, and they'll be available and raising. I can't remember. They'll be lowering bond prices, and the Treasury will have to, or the government will have to raise taxes if they decide to start dumping it. If it's too big a scale. The other issue is that these other this case with Europe is interesting. Europe can use us as a reserve currency because they're not really. The euro's not as backed as we are. Europe might eventually become more like the United States. Somebody will pull a Hamilton and they'll have a consolidated debt and a consolidated tax system. If they do that, they may give us a run for our money. Now,
what does a run for our money mean?
We won't be able to buy products overseas so cheaply because suddenly the benefits of reserve currency go away. Of us,
you mean the dollar will go down?
Yeah, the dollar will go down. The consumer right now is,
okay. But the euro came in at 85.
Is doing good.
The euro came in at the euro started somewhere around 85 and got up. It's up around 130. So that's already happened by 50% or more.
But it's still shall we say shaky because it's got some countries that are in great shape, some countries that aren't in so great shape, and the status of the euro is not as tied to the economies.
And as soon as the euro got strong, it just ran up just a few points the other day. The Europeans were all up in arms. The Japanese and everybody else doing this to their currency. They're worried about people weakening their currencies. They're not worried about their own currency. Nobody's worried about their own currency weakening.
When they become a more consolidated government, that's when interesting things will start happening. Now, and the same with China. They may just...
Well, they consider a strong euro a problem that they have to do something about.
It's interesting.
They consider a strong euro a problem that they have to do something about.
Yeah. The other problem, conceivably, is once the world owns so much more of our debt that they'll want a share in the financial decision making. We have a pretty much the Fed has a pretty much free ride, and they negotiate with everybody, but they're still the Fed. And maybe behind the scenes, it's already the case that they're doing a lot of consulting with international banks. But it's going to be a lot. Let's just say a loss of sovereignty question in the future if our net interest bills keep piling up. So that's what the concern I had. Was the loss of sovereignty, and that's what I put in my testimony.
I'll disrespectfully. I disagree with that.
He's going to go away with sovereignty when we've got 14 aircraft carriers sitting around the world.
No, but they'll want more. That's the
I don't
other
see that as a
begin to
problem,
resent. They'll demand.
I don't care about that. First of all. Okay, so what the evidence is, nobody in the history of the world.
It's not something you can.
Nobody in the history of the world has ever had an issue with their unindexed local currency, debt, treasury securities, whatever you want to call them. From the worst off banana republic to Japan to the United States, it just doesn't ever happen. And if you look at
Warren, what happened with Argentina?
Not that. Something completely different.
To extend governance rights to people who were protecting militarily and
Why?
whose economies.
Why?
Because they are as much in
Who are we
the
protecting?
system as we are at that point.
No, look, China let their entire bill portfolio run off back in 2011. 2011. Nobody even noticed. When I first started in the 70s, early 70s, I was at Bankers Trust, and every morning we'd come in and look and say, how many bonds did the Bank of England buy? What if they stop buying? What's ever going to happen to the U.S.? And then it was the Saudis and the Japanese and the Chinese. It's just been going on and on. It never matters. And so I stopped to think about why it doesn't ever matter. Because it doesn't ever matter. And the reason is because the government spends, if you look at the accounts closely at the Fed, at any central bank, the government spends first and then issues securities. It does not issue securities to be able to spend. It It issues securities after it spends, and those securities serve to support interest rate targets. They do not serve to fund spending. Now, inside the Fed, they say it this way. You can't do a reserve drain without doing a reserve add. And what used to happen is, until the QE, which I can explain later, but up until a couple of years ago, is that whenever the Treasury borrowed, the Fed would have to spend first. It would come in and do repos or some kind of a reserve add in order to provide the funds for the Treasury to borrow. The government had to spend first and then borrow. Now, what the Fed's done with QE is it spent first, bought $3 trillion of securities, and then the Treasury borrows after that. But it's the same sequence of events. And if you think of it, the issuer of anything can't collect his thing until after he issues it. The government can't collect dollars until after it spends them. It can't borrow from China until after it spends. China doesn't grow the money on trees or counterfeit it. They get it from us. Okay, so we spend first at China's reserve account. Then we offer securities, which are just another account at the Fed called securities accounts. And then when China buys the debt, all we do is shift their dollars from reserve accounts to securities accounts at the Fed. We spend first and then shift their balances. And look, otherwise, don't you think there'd be a problem before $16 trillion? What was going to be a problem? Would have been before $16 trillion?
Well,
maybe $15 trillion or $10 trillion or $1 trillion?
Well, Warren,
Japan with 3 times our debt?
Warren, what does the impact of having interest rates at zero, then how is that relative, to this discussion and what you're bringing up, because there'll be people out there, such as I believe his name is Peter Schiff, right, who will who will state that as soon as right now it costs nothing to borrow anything, so as soon as that that goes up, any minor amount of basis points or any whatever, as soon as it goes up, that's when people are going to feel the effects of what's been going down. And what would be your response to that?
Well, I ran for Senate against Peter Schiff in Connecticut briefly, so it was interesting. Anyway, look, when interest rates only go up when the Fed raises rates. We all listen to the results of the Fed meeting. Oh, rates unchanged. Rates up, rates down. They vote on the rate. So if the Fed decides to pay higher rates, then the government pays higher rates on all the funds that its deficit spent. When it spends, money goes into accounts at the Fed. When they raise rates, they pay more interest on those accounts. You call them Treasury securities, reserves, whatever you want. They're all government accounts. And so where does that interest come from? Same place all dollars come from. They just change the number in a bank account. They credit the account. Chairman Bernanke was asked where the hundreds of billions came from.
Here, Warren. Can you hear me?
Yeah.
I hear you, yes.
Yeah, go ahead, Norman.
Are you losing me?
No, I hear you.
Okay.
Chairman
Bernanke
using that thesis that you've outlined there, Warren.
Yeah.
On the basis that, the government spends the money and so on, and nothing really happens. Let's say we have a lot of unemployment as a result of the sequester.
Yeah.
People out of work, and maybe it goes backwards, and we get even more people out of work.
Yes.
On that basis, if it was possible, we could just keep paying them their salaries, and it wouldn't make any difference.
Yeah, in other words,
keep paying them unemployment.
Yeah, so look, what we should be doing is cutting taxes, and increasing spending. Some combination, some grand bargain, some compromise where the Republicans get some tax cuts and the Democrats get some spending increases. The problem is the deficit's small. It needs to be larger, but everybody in Congress thinks it's too large. It needs to be smaller. It's a complete disaster. It's like
I'm just using your thesis and trying to see where it goes. I'm trying to see where your thesis goes by saying, okay, why do we have to actually work? why not just get the Federal Reserve to keep spending money and handing it out to folks who buy stuff and...
Oh, you're coming out garbled. I can't hear you. Sorry.
He's saying, and Norman, tell me if I'm...
He works for the government anyway, right? They don't produce anything.
Well, we can certainly afford to pay unemployment. Is that what the question was? I couldn't hear it.
His question, related to just the idea of, I think, government employees, working and why even pay them a salary was kind of what I got from it. Norman, am I kind of restating your question a bit better, or no?
I don't know if you can hear me properly. I'm not sure I can hear you guys properly.
I hear you fine, Norman.
Look, it's always better. It's always better if government gets value for money. And if it can't spend to get value for money, you should just lower taxes. Okay, but there has to be a deficit large enough to cover the savings desires.
Investing, which is basically social credit, is
military.
Hello?
What value are we getting out of them?
Of what? What value are we getting out of it?
Norman, I would click the turn off camera button again, because it might be due to some of your lag of why you're coming in choppy. Michael, did you have something to say?
Yeah, I also want to
come back.
But I think Norman was suggesting was some part of social credit where you just pay people, have the Fed pay people money, and then they spend it rather than having to go to work. The only problem I've had with that theory is that there are some people who have to work, or some people whose for now services we have to have, and the people that have to work would just refuse services to those who get money and don't have to work. There'd have to be some modification made. Now, I think we can do good in dealing with the equality of that, but that is way off topic now.
Well, look, the problem is the deficit is too small. You can make it larger either by cutting taxes or increasing spending. If you can't get value for money, then the government should not increase spending.
But so
it's got to be efficient, lean, and mean.
So
and then lower taxes until we get back to full employment.
Warren, so
whose taxes we're cutting? I think if we're cutting,
I agree.
I think if we raise taxes from people who held money, and some trend lines that I've run between Democratic and Republican administrations have shown this. If you've got a Democratic administration that raises taxes, it also gets more growth. The more it raises, the more it balances the budget or runs a surplus.
I disagree.
Well, that's what my numbers ran, and then with Republican administrations, the more they borrowed, the more growth they had. But in Democrats, pretty consistently, now Obama breaks the case because he kept George Bush's tax policy, but even this little $300 billion thing helped. Clinton had a positive slope too. Bush was negative. If you raise taxes even more on the people who are in the savings sector, rather than putting them in Wall Street casinos, they'll be in the system, and that also would cause growth. So we could raise taxes and get growth. We have in the past. We could in the future. We just don't have anybody who's willing to admit that. You've taken an economics class.
We go back into history, but what drove the Clinton boom was the private sector credit expansion and borrowing, which grew to 7% of GDP, with the Y2K and the dot-com boom until it just couldn't do it anymore. It was unsustainable. there wasn't enough income to support private sector credit growth. If you look at the, and it was the Clinton change in tax rates that caused the budget to go into surplus, which drained the economy of net financial assets and caused the crash. Okay, so if you look in the U.S. history, all 7 periods of budget surpluses were followed by the only 7 depressions. There's a 1-to-1 correlation.
The surplus that they had, the problem with that analysis is that the specific tax cut that got raised in '97 when they did this, they did the capital gains tax cut, and they cut it down to below normal rates, and that's what caused that tech boom as much as anything else, or the investment boom. Everybody wanted to fund their own IPO and cash out before people realized they didn't have a product. That's what caused the 2 things. That caused the revenues to appear to that they were big because people were cashing in, and that money was posted as revenue, and it made it look, and that made it look like, for the far future, the economy would be fine. Let's cut taxes later. But it also, jumped up the savings sector again. People were undertaxed.
This is
too much money.
Like the Middle East on.
Savings went negative. We were net borrowing.
I think most people, even if they don't agree with us, Warren, like the idea of a balanced budget, low taxes, and a growing economy, preferably in the private sector. So, even though we have a reserve currency and we're probably the biggest, or close to being the biggest economy in the world, and we pretty much, money talks and bullshit walks, trying to get there is the hard thing. So even though half the country works for the government in one way or another, it would be nice to put the government aside a little bit, and instead of just doing a wholesale cut like we did, pair it off with incentives for manufacturing and job growth. People still like working. They don't like being on holiday all year round.
Look, if they're going to make the deficit smaller, they're going to make the economy worse, no matter what they do.
I don't know what the economy working looks like. What does that look like?
Unemployment higher than it would be otherwise. GDP lower than it would be otherwise.
Goes up, but I'll buy the employment.
So my quick question to you, Warren, would be, you're making the case that, the deficit is not high enough, and there could be higher spending with lower, taxes, right? But wouldn't people?
Yeah, some combination, depending on your politics.
Right. So wouldn't some people argue though that over the past, and maybe your answer is going to be that the spending hasn't been in the right places, but wouldn't some people argue that that has been taking place over the past decade, and a major influx of spending, with the lowest tax rates that have ever been seen inside this country?
Right, but we also have the highest savings desires ever. The money piling up in pension funds, corporate reserves, foreign central bank, holdings of dollars, the whole thing. They're called demand leakages. And they have to be offset by some agents spending more than its income. And only the government can do that right now. So it either has to lower its income or increase its spending.
Yeah.
There's no other way.
What were you going to say, Michael?
Taxation's a better route.
Michael, what were you about to say?
Taxation would probably be a better route.
Okay.
Taxation takes dollars out of the economy.
Not if it's not. No, if it's not in the economy and it's in the savings sector, in the demand leakage sector, in the speculative sector, it's not. There's the economy where things are actually consumed, bought, households, operate in, and then there's the other one that has got more money than it needs right now, or some families have more money than they need right now. The money's being saved. They all spend it. If they'd all spend it all the time, that would be a wonderful thing. But they're not. You can only buy so much toilet paper.
Right. Okay, I'm not too sure what happened to Warren. Norman, did you have any comments that you wanted to make?
Well, I mean, Michael's got a point. If you don't spend it, you can't get the wheels of the economy turning. So you've got a large portion of the country that's underemployed. You've got college graduates with their degrees that 50% of them can't find decent work or college-related work. So there are a lot of structural things that are difficult to overcome. But that's something that's fiscal policy. So trying to get the government to do something about that is obviously very difficult. It has to go down to the state level for them to try and do something about it. Now, in my state, which is Virginia, 45% of its economy depends on the government. And so Virginia is going to be going from what was a very sound financial state to a state that's going to hurt quite a lot compared to the rest of the country.
Right.
How do you turn that round? When you're used to depending on the government for your economy, it's pretty difficult to do that.
Michael, do you have any thoughts? And what I was going to say, Mike, did you have anything that you wanted to bring up there? Because Warren actually mentions in the text chat. He says when government taxes, it debits member bank accounts on its books. It doesn't get anything. When government spends, it credits accounts. It doesn't use up anything. So, do you agree with Warren in that statement?
The individuals who hold that money, obviously are getting some income from it. The people who have money, I'm talking about the private individuals with money, not the banking system. So, not the reserves. Unless we put in a Tobin tax, that would be a unique experience. Although I don't think it would pass. It might though.
Guys, I'll be back in. I'll be back in 1 second. Sorry.
Okay.
Keep going, Michael.
Yeah, it's taxing rich households. That's really what we can do, and I guess we can tax rich corporations too. The whole effort to have a tax holiday as part of lowering the
Michael,
25.
what would you do with the extra revenue?
Tax it.
No. The revenue taxes. The government's taxing the corporation. It's taxing rich households. What's it going to do with the money?
And it would also tax repatriated capital. That's why tax reform had included a corporate tax reform in the equation. It can pay back the money, or it can do projects, or both. It can do a lot. There's a lot of money that they could grab.
But what would they do with it?
They would spend it, probably.
On what?
Programs are generous.
On what? Military?
Oh, heavens no. I would say space exploration. I would say they also need to seriously raise the price of the gas tax, so they can. What was that? Okay, somebody turned on an echo.
Might be Warren. I think we're being attacked by China cyberly.
Being hacked.
Dad, where can we get that echo?
It's a mind meld.
If you,
Like a really little girl.
I think it might be on Michael's end. I don't know though. Warren, do you hear us?
Can you hear me?
Yeah, I hear you. Michael, could you mute your camera when you're not speaking? I think it's on your end. Okay. Michael, are you there?
I'm back. Yes.
Okay. So I'm sorry. Who was speaking before? I'm not sure where you guys were.
We were getting a lot of money from the government, and we were trying to figure out what to do with it if we were the government, how to spend it. If I was in Saudi Arabia or any one of those countries, I'd probably find a way, but I don't know what we do with it here.
Right.
We need to raise gas taxes, and because they haven't gone up in a long time, and well, it's a use fee, and really do some infrastructure in that, or you could, maybe we could give the highway fund a loan and gradually raise gas taxes or raise them at a later date. But
excuse me. We can do all that spending anyway. We have excess capacity and a shortage of aggregate demand. There's nothing stopping us from doing it now.
Warren, you make a good. You know, if you compare us to Norway, which has so much oil that it's got a sovereign fund account for its people for the next 50 years, based on your thesis, our situation would be similar, because all we'd have to do is print enough money to create a sovereign fund invested, and the dividend could go to the people over the next 50 years.
Yeah, but why bother? The Fed spends just by crediting accounts. It doesn't come from anywhere. If you're in a football game and you kick a field goal, you get 3 points. Where does 3 points come from? It doesn't come from anywhere. Well, it's always been like that. I'm not proposing a new system. That's just how it works.
Does anyone have a response?
Doing that, there'd be a problem with.
We've been doing that for 200 years.
If the scale that the U.S. is expanding its net interest debt and debt balancing out, the extent to which we're rolling over our debt is going to eventually have all the people that owe us money to, and all the people who we protect with our military want two things: a say in how that military is used, and a say in how that financial policy is created. So that's what I was meaning behind loss of sovereignty, and that's the only reason this issue is important. But that's way down the line. It's not important this year. This year, what we need to do is spend a lot of money. I agree with that totally.
Yeah, or cut the tax.
Look, my point
is, a lot of people in jail want to get out. But they don't have a lot to say about it. And so people who hold treasury securities. China has $2 trillion in the Fed in securities accounts. What would happen if we had a computer glitch and tell China, I'm sorry, we lost all your records? What do they have? Nothing. We're holding all the cards. Why are they doing it? They're doing it to support their exporters. Narrow special interests at the cost to the macro economy.
All right. Well,
What we need to do is at least join the world in a VAT system. That way we can at least stop the drain on our economy.
What drain? The drain is from not enough spending. That raises prices. Get less spending. It's backwards. We need to eliminate.
Drain and labor.
We should eliminate the FICA. We need a full payroll tax on it. The UK needs to eliminate VAT.
all right. Well, guys, what I was gonna say is, we've been speaking for just over an hour now. I don't know if you guys wanted to continue your discussion. It's been amazing, and so I wanted to thank you for your time. Do you guys want to continue the discussion? I'd be happy to have each of you on again. I just don't know what your schedules are, and if you have something to do. But you're welcome to continue. I can continue the recording if you'd like.
Max, I've got visitors, so I got to.
Okay, no problem. Thank you.
Thanks, guys. That's good.
Thank you.
Thanks, Warren.
I'll go to my website.
You got a website?
MoslerEconomics.com.
Great. Yeah.
Just let me know in the Occupy group.
All right. All right. Great. Yeah. If everyone.
Good job, guys.
Thanks to you, Warren.
All right. Thanks so much, guys.
Bye-bye.
Thanks, Max. Thanks, Max.
Thanks, guys.
Bye.
Thanks. Bye-bye.
Bye.